Hi there, so I'm just going to review my trading from today's NQ session in the morning. As you can see, I missed my entry on the move down from the 9:30 open bell, but I marked up the first presented fair value gap. I am looking to see where price is when we reach our manipulation phase of in the fib time zone. If you saw my video from yesterday, I'm working with the market entry, the market paradigm efficiency from ICT to see where my market entry should be. The manipulation phase should be, and honestly, this 9:45 was when I should have entered, but unfortunately I had a colleague with me in the office and I wasn't looking, and so I actually missed that opportunity. And as you can see, we've got some big green candles and we move on up higher, and I missed it, but oh dear, such is life. So my next phase of entry was to look to see how price reacted to this first presented fair value gap, which I had marked out, and if we break through that, then it was a buy for me. I saw that close, I said, yeah, I think we're good. So I put that in, put my stop loss at equilibrium of the fib time tool, well, the entry at 8 p.m. from yesterday. Stop loss is a bit wide, but that would be the low, obviously, in case we trace back into those two SIBIs and BISIs. But essentially, I wanted to pyramid in, and that should have been my entry right there, but I didn't. I was a little bit late to actually pull the trigger again, and as you can see, I just pyramided in just there. So, all in all, I mean, it would have been a great trade to have been able to get in at 9:45. And that's the thing, you've got to be present at the time when price is moving. I even said to my colleague, oh my God, you made me miss a trade. But such is life, it's been a long week, some good lessons learned, and I was just pleased to see that price was moving in the right direction. I'd made a good decision, because in all honesty, from the outset, I wasn't 100% sure if we were going lower or higher. I looked at where those fair value gaps were, the most recent highs and lows, but I wasn't 100% sure if overall we were going up higher. But as I read the tape, I see, the high was broken there. We've got a fair value gap, and I didn't really want to see price go below that area. And I wasn't sure if we were rejecting the 22,800 level. That being said, I think it was just a little bit of time distortion, but mind you, we're in the middle of that macro, which would have been the 9:45 to 10:15 macro. So I didn't expect to see reversal, but we've got some element of, I guess, time distortion, price distortion, whatever you want to call it. And so, as you can see, as we move through that area, price moves up, and I'm trying to manage my trades much better now with the stop loss and moving it up. In case it does move back, I've got to get much more precise and much better at that, and just read the tape to see where those gaps are, and placing my stop loss is below them, to make sure that I don't lose, profit that I would have had. So price did pass through the 22,800 level. I would have liked it to go higher with a BISI, for example. That's a very clear sign, because my target probably would have been equilibrium of the next price range, because we've just seen the 10 o'clock candle open low. So I'm anticipating the prices to continue up higher through 10 o'clock, let's say. And as you can see, it's really difficult for me to keep focused on the price as well and what's happening. You can see the SMT at the top. I'm thinking, do I go to break even? I want to kind of make sure that I get something out of the trade, if not, more. I would like it to go all the way up to my TP, but I'm very conscious that it may not. But having it in a sensible place, you'll take profit in a sensible place where there's liquidity. And this market efficiency paradigm that from ICT talks about looking at it to take in liquidity, external and internal liquidity at the right time. So as you can see here, we continue up. We're at quite a good position, but still not quite at equilibrium, and it could have been a good exit point in hindsight, but obviously I'm holding on. I'm looking to see where price is going. I'm moving the stop losses high. I'm looking to see where there is that where price has broken through the internal high. I'm hoping that price does not retrace below that line. I can see we've got a wick, but it closed above, so I'm thinking price will stay above there. We're also above the equilibrium of that 30-minute cycle as well, which is good. I could have pushed it a little bit higher. This was a good position. You can see I moved the stop loss again a little bit tighter, because I'm thinking we're going to keep going up higher, but I'm not going to adjust my stop loss any further. So now as we go into this the second 30-minute cycle of after 10 o'clock, let's say, you see that retracement, and eventually I can't remember, I think I actually just stopped it myself, to be honest with you, as opposed to letting it hit my stop loss, because I could see that price was coming down a little bit lower. I'm thinking, do you know what, that is enough, it's good enough right there. So yeah, here we go, it hits the stop loss right there. I must admit at this point I'm thinking, actually we've just taken that low, high, low, high, lower, low. Is that a market structure shift to go down lower? I could re-enter for the sale program, and this is how, if you're skilled, you could just play the ping pong game, go from left side of the curve to the right side of the curve, because there's all of the signatures now for the sell program. So price continues to start to drop, and move lower below equilibrium. Obviously you've got the fair value gap there. There's a market structure shift as such, and so there is actually an opportunity for somebody to re-enter or enter the trade at this point for lower prices, and there actually isn't anything wrong with doing that at all, if you're skilled enough and know what you're doing, so to speak, to go against the trend. But you see there's big down candles all the way back down to that point of interest, which is the fair value gap that we have on, I think it's on a 1 hour time frame, and at this point I see we reach that low, and I'm saying to myself, actually we've just taken a low, we've got a high, lower low, and I'm thinking, actually could this be another opportunity to get back in? See that market structure shift right there, and I'm thinking, we could maybe still be going up to our take profit. Yeah, is this a opportunity to buy again? And guess what? Yeah, I did. I jumped in. It's called chasing because I didn't get to my take profit, over trading. I mean, I did jump in again and I did get some profit. Not as much as I should have done, but yeah, I got to a point as I was like, do you know what? I really shouldn't be in this again because it could go terribly wrong. We reached that high, we have a small amount of retracement, and then that's when I just decide, do you know what? Enough is enough. I'm up for the day. Let's call it quits. And this is the psychology of not being able to manage your trades and not overtrade and not squander everything, because I should have just closed it there, but is it greed that kept me in the trade longer than I really needed to be in it? Because I don't know, there's a certain amount of satisfaction that you get if it reaches your take profit, right? Than if you just close it. But I think really and truly you've just got to be satisfied with a win, and that's basically it. So therein I entered the trade and left it at that, and for the remainder of the day I think it just went back and forth. So thanks ever so much for watching. I hope you had a great week as well, and we'll be back at it again next week. So do drop a comment, let me know how I'm doing, and I'd love to hear how you're also getting on. Thanks.